Assalamualaikum and hi everyone. Today we are going to learn about Chapter 10 Standard Costing and Variance Analysis.
A study objective for today, we will looking at definition of standard costing, second, uses of standard costing, and third, types of standard. Definition of standard costing. A standard cost are predetermined unit costs which are used as measures of performance. Standard costing values its manufactured product with a predetermined material cost, a predetermined direct labor cost, and a predetermined manufacturing overhead cost. Distinguishing between standards and budgets. What is a standard cost? A standard cost means the budgeted cost of one unit of products. Meanwhile, for budgeted costs, budget means the total amount of whole budgeted production. Uses of standard costing. Standards are important for decision making. The decision making we made related to how we produce our product and how we price our product. Number two, monitor manufacturing. Indicates that a large variances may be indicative of problems in production. And number three, performance measurement. Differences between actual and standards are often used as measure of a manager's performance. We continue uses of standard costing. Standard costing is a tool that helps management account in controlling costs. Standard costing also facilitates management planning. And the last one, a standard costing, useful in setting selling price. How do we set the standard? Standard costs are developed in a variety of ways. General practices. First, standard costs are developed from prior year's performance. The standard costs also are developed from expected future performance under normal operating conditions. Number three, develops from price lists provided by suppliers. Number four, determine times and motion studies conducted by industrial engineers. And the last one, standard costs are developed from analysis of past data. Types of standard. There are three types of standard. First, ideal standard. Second, normal or attainable standard. And third, the basic standard. First of all, we will looking at ideal standard. Ideal standard represent optimum level of performance under perfect operating conditions. Developed under the assumption that no obstacles to the production process will be encountered. The level of performance under ideal standard would be achieved through the best possible combination of factors. The most favorable prices for materials and labor, highest output with the best equipment and layout, and maximum efficiency in the utilization of the production resources. Now look at normal or attainable standards. A normal standard represents efficient levels of performance that are attainable under expected operating conditions. Developed under the assumption that there will be occasional problems in the production process, such as equipment failure, labor turnover, and materials defect. The last one, basic standard. The basic standard is established for use unaltered for an indefinite period, which may be a long period of time. A basic standard are seldom revised or updated to reflect current operating costs and price level changes. A basic standard representing a fixed base are used mainly to measure trends in operating performance. Question for today. First, distinguish between standards and budgets. Question number 2. How we set the standard. Question number 3. What are the types of standard? That's all for today. See you next.